mentality. Okay, Nimesh, you want to tell us to be a little cautious about the mid and small cap.
So, Sonia, last week I put out a piece on why liquidity is helping the mid cap and small cap and the broader market, so to speak. And I'll just pick what Hiren said about narratives, and that's what exactly I'm trying to do in the broader markets. I mean, let me just go to the wall and explain what has mid cap and small cap done, and why narrative sometimes is actually bad for retail investors. So let's look at what's happening in the broader markets. They're absolutely on a tear. The mid cap and small cap indices in the last 3 months, in the last 3 months itself, the mid cap index is up close to 18% and the small cap index is up close to 20%. So that's the only last 3 months of move in the broader markets, the mid cap and the small cap indices. Now, within those indices, I've just looked at some 8-10 stocks which have actually gone up more than 100% in the last 3 months. Look at the list now. Patel Engineering is up 165%. Inox Swing 156%. Mazgaon Dog is up another 144% in the last 3 months. Suzlon is up 124%. The likes of Jinda also 116, Genus Power 110, and Force Motor is up 109%. Now, these are the big movers in the last 3 months. But what is common in all this, common factor in all these names? The institutional holding in these names is very, very low. Look at Patel Engineering. There is negligible institutional holding. Inox Swing, virtually zero institutional holding. Even in Mazgaon Dog, the government holding is 85%, and there is not a single institutional investor, even in Mazgaon Dog. That stock, you remember, is up 5 times in the last 1 year. Suzlon, just 6% institutional holding. In fact, in Suzlon, the promoter holding is also less at 15%. Jindal Saw, the holding is just 15%. Genus Power, which has been in the news of late, only 5% is held by a single mutual fund investor. There is no other institutional investor, even in Genus Power. So is the case with Force Motors as well, just 5% across mutual funds and institutional investors. So that's what, the institutional holding is very low. I'm just highlighting a very interesting report from Sanjeev Prasad. He says on mid caps, it's all about narratives after narratives. And they've been very surprised with the kind of narratives which have been spread and the themes which have been talked about. And sometimes they do disappreciate moves in the stock prices in the mid cap and small cap. But broadly, over the years, he's figured out that, there are many times there are disappointments. Instances being MFIs in 2015, consumer durable names in 2018, and recently the specialty chemical names all have not lived up to their expectations, what the narratives have been in the last many decades for the mid cap and small cap. So that's the interesting report from Sanjeev Prasad. Now, so the key message for the retail investors is do not get carried away by the narratives in the mid cap and small cap. I just want to leave another example. I just met a very large investor from South last week, and he made a very interesting observation as well. This particular gentleman has made 100 times return in JBM Auto in the last 10 years. 100 times, yes, 100x returns in JBM Auto. But he sold out completely between 650 and 850. And he said that valuations matter to me a lot. And when people start talking about narratives, that's when he looks to sell. So narratives in mid cap and small cap is something when investors need to be very careful about, and that's what is happening currently in the broader market. So, as I said, there is liquidity which is winning the fundamentals, but do keep in mind the narratives in the mid cap and small cap actually turns out to be a bad investment for a lot of investors.
All right, Nimesh, thanks a lot for that. Let's do one thing. We have to take a quick commercial break. On the other side of the break, we'll put the spotlight on the home improvement theme and continue our chat with Hiren Ved. Stay tuned.